What if one man turned simple, often considered boring, investments into one of the greatest fortunes in human history? No crypto, no fleeting hype, no shortcuts promising instant riches. Just unyielding strategy, unwavering patience, and a profound mindset that almost nobody else truly follows. His name, etched into the annals of financial legend, is Warren Buffett. In this video, we will embark on a journey to uncover how a young boy, consumed by an almost insatiable obsession with numbers, meticulously charted his course to become one of the wealthiest individuals on Earth. Our exploration will reveal how Warren Buffett made his very first investment at an astonishingly young age, the deceptively simple yet immensely powerful strategy he employed to amass billions, the most significant mistake that ensnares the vast majority of investors, and the profound mindset that elevated him to the pantheon of investing greats. This is not merely a tale about money. It is a compelling narrative about the transformative power of thinking fundamentally differently from the prevailing crowd. Our story begins in the unremarkable but fertile ground of Omaha, Nebraska, where a young Warren Buffett emerged as a precocious and singularly focused child. His insatiable curiosity for numbers and the intricate machinations of business stood in stark contrast to the typical childhood pursuits of his peers. While other children chased balls and played games, Warren was already dissecting balance sheets in his mind, his imagination ignited by the world of commerce. His early motivations were crystal clear: a burning desire for independence and a deep-seated need to comprehend the inner workings of money. This nascent financial acumen was undoubtedly nurtured by the quiet influence of his father, a stockbroker who inadvertently instilled foundational financial principles in his impressionable young son. The elder Buffett's world of stocks and bonds, though perhaps dry to others, was a vibrant tapestry of opportunity to young Warren. His initial forays into the world of business were charmingly humble, yet profoundly formative. He meticulously sold chewing gum, then expanded to Coca-Cola, and later delivered newspapers, each transaction a miniature lesson in economics. The thrill of earning his own money, the tangible act of commerce, and the nascent understanding of profit margins became deeply ingrained lessons, learned not from textbooks, but from the streets of Omaha, at an age when most children were still learning basic arithmetic. Then came what would become a defining moment, a crucible that forged his future philosophy. At the tender age of 11, Warren made his first stock purchase. He invested in City Service preferred stock, a decision that initially filled him with excitement. However, the market, fickle and unpredictable, soon saw the stock drop, plunging young Warren into a maelstrom of panic. He eventually sold for a small, hard-won profit, a momentary sigh of relief. Yet, the sting of regret followed swiftly when he witnessed the same stock skyrocket shortly thereafter. This painful experience, a bitter pill to swallow, became an invaluable lesson in patience and the unwavering conviction required to navigate the market's whims. From this early encounter, the seeds of a profound investing philosophy were sown. The experience hammered home the idea that patience and a deep intrinsic understanding of a business were paramount, far outweighing the transient fluctuations of the market. While the world around him clamored for quick gains and speculative ventures, a stark contrast to his slowly forming, disciplined approach, Warren began to walk a different path. His peers, and even some adults, often dismissed his methodical, almost obsessive nature as peculiar. His intellectual journey then led him to a pivotal discovery: Benjamin Graham's seminal work, The Intelligent Investor. This book became his Bible, providing the intellectual framework and rigorous discipline for what would later be known as value investing. The profound impact of Graham's teachings cannot be overstated. They provided the compass for his future endeavors. Despite these early setbacks and the constant allure of easier, quicker paths, Warren committed himself wholeheartedly to Graham's philosophy. setting him on a collision course with conventional wisdom. The question lingered, a subtle tension in the air. Could such a seemingly simple, almost antiquated, approach truly lead to extraordinary wealth in an increasingly complex and fast-paced world? Before we continue, subscribe to the channel and tell us in the comments where you are watching from. From a young boy learning hard lessons, observing the market's capricious nature, and finding his intellectual anchor in Benjamin Graham's wisdom, Warren Buffett emerged from college with an unwavering commitment to value investing. His path was clear, albeit unconventional, and it led him directly to a struggling textile company in New Bedford, Massachusetts, Berkshire Hathaway. This textile mill, a relic of a bygone industrial era, seemed an unlikely vessel for a financial genius, yet Buffett saw beyond its fading looms. He began his initial investment, gradually increasing his stake until he orchestrated a full takeover. What many perceived as a questionable acquisition, Buffett envisioned as a strategic pivot. He systematically began to transform Berkshire Hathaway, slowly and deliberately shifting its focus from textiles, an industry he recognized as inherently challenged, into a formidable holding company, a diversified portfolio of businesses that would eventually span across countless sectors. This transformation wasn't born of impulse. It was the embodiment of his defining strategy, the buy and hold philosophy. Buffett sought out businesses he could genuinely understand, companies possessing strong, durable competitive advantages, what he famously termed moats, and he insisted on acquiring them at a fair, often undervalued price. His approach stood in stark contrast to the frenetic, short-term focus prevalent on Wall Street, where speculative bets and quarterly earnings often overshadowed long-term value. While others chased fleeting trends, Buffett patiently cultivated enduring enterprises. His early successes served as powerful demonstrations of this patient, long-term approach. The investment in American Express, after the salad oil scandal had unfairly battered its stock, showcased his ability to discern fundamental value amidst panic. Similarly, his acquisition of See's Candies, a seemingly simple confectionery business, proved the immense power of strong brands and pricing power. These early triumphs, though perhaps not grabbing headlines in the same way as tech IPOs, began to quietly build the foundation of his burgeoning fortune, proving that his boring methods yielded extraordinary results. The true magic behind Buffett's wealth accumulation lay in the power of compounding. His strategy, combined with the relentless march of time, allowed his capital to grow not just linearly, but exponentially. He often described it as snowballing. A small snowball at the top of a long hill gains size and momentum as it rolls, accumulating more snow with each turn. Every dollar earned and reinvested became a new seed for further growth, creating a virtuous cycle that consistently amplified his returns over decades. Yet, this consistent, steady accumulation often led to the betrayal of conventional wisdom. Wall Street, with its insatiable appetite for novelty and speed, frequently mocked or simply ignored Buffett's seemingly antiquated methods. While the financial media buzzed about flashy tech stocks, intricate financial instruments, and complex derivatives, Buffett continued to preach the virtues of understanding balance sheets and management quality. This created an ongoing, almost poetic conflict between his refreshingly simple, transparent approach and the market's incessant chase for the next big thing, often leading to speculative bubbles and subsequent crashes. Beyond his investment acumen, Buffett's personal life reflected his disciplined philosophy. His famously frugal lifestyle, despite his growing wealth, was a testament to his dedication to continuous learning and sensible living. He never chased luxury for its own sake. Instead, he relentlessly pursued knowledge and sound investments, understanding that true wealth was built on substance, not superficiality. His daily routine revolved around reading and thinking, refining his understanding of businesses and human behavior. As his wealth grew, so did public scrutiny. He faced increasing pressure to conform, to diversify into the hot sectors, to participate in the latest market fads. Yet, he steadfastly resisted. His conviction, forged in the crucible of early lessons and reinforced by consistent success, was continually tested, but it never wavered. He remained an anchor of rationality in a sea of financial exuberance. The revelation of his consistency became undeniable. While others experienced dramatic peaks and valleys, riding market bubbles only to crash alongside them, Buffett's steady hand and remarkably consistent returns became a phenomenon. His boring strategy, once dismissed, proved to be incredibly effective, leaving many on Wall Street scratching their heads, unable to reconcile his simple wisdom with their complex theories. Despite his growing success, the market is cyclical, and recessions constantly loom. Can his steadfast philosophy withstand the ultimate test of market crashes and economic downturns, or will his boring approach finally falter when the global economy faces its next significant challenge? The question of whether Buffett's steadfast philosophy could weather the storm of economic downturns hung heavy in the air, a challenge to his unconventional wisdom. Yet, it was precisely during these periods of widespread panic and uncertainty that his approach shone brightest. While other investors capitulated, selling off assets in a frenzy, Buffett saw opportunity. During the stock market crash of 1987, when fear gripped the financial world, he famously acquired significant stakes in Coca-Cola, a move that would become one of his most iconic and profitable investments. Decades later, as the global financial crisis of 2008 threatened to unravel the entire economic system, Buffett, the Oracle of Omaha, once again demonstrated his unparalleled foresight. He injected billions into struggling institutions like Goldman Sachs and Bank of America, providing crucial capital when no one else dared, securing preferential terms that proved immensely lucrative for Berkshire Hathaway. His willingness to invest when others were paralyzed by fear was not recklessness, but a testament to his deep understanding of intrinsic value and his unwavering conviction in the long-term prospects of solid businesses. This audacious strategy during crises led to the ultimate redemption of boring. His methods, once mocked by the fast-paced world of Wall Street, were now revered. He transformed from an outlier into a financial sage, a beacon of stability and wisdom in an increasingly volatile financial landscape. The moniker, the Oracle of Omaha, was no longer a nickname, but a title of profound respect, reflecting his uncanny ability to see through the noise and identify enduring value. Beyond his investment prowess, Buffett cultivated something equally rare and valuable in the financial world: trust and an impeccable reputation. His ethical approach to business, characterized by transparency and straightforward communication with shareholders, built an immense reservoir of goodwill. He treated Berkshire Hathaway's shareholders as partners, regularly penning candid letters that explained his decisions, admitted his mistakes, and laid bare his philosophy. This level of honesty, a stark contrast to the often opaque and self-serving practices of many financial institutions, fostered a loyalty that few public figures could command. It proved that in the long run, integrity was not just a moral virtue, but a powerful business asset. As his wealth grew to staggering proportions, Warren Buffett turned his attention to a legacy beyond mere financial accumulation. His massive commitment to philanthropy, pledging the majority of his wealth to the Bill and Melinda Gates Foundation and other charitable causes, transcended the typical narrative of financial success. This act spoke to a deeper purpose, a profound belief in using his resources to effect global change and improve human lives. It underscored that for Buffett, wealth was ultimately a tool, not an end in itself. His life's work also served as a living lesson, particularly in highlighting what he often called the biggest mistake most investors make: This wasn't a tactical error, but a fundamental flaw in approach. Short-term thinking, emotional decisions driven by greed or fear, and the relentless chasing of trends instead of understanding fundamental business value. He constantly warned against allowing market sentiment to dictate investment choices, advocating instead for a dispassionate, analytical approach grounded in reality. These pitfalls, which Buffett meticulously avoided throughout his career, were the very traps that ensnared countless others. The enduring mindset of Warren Buffett rests on core principles: patience, discipline, independent thinking, and an unwavering long-term perspective. These are not merely investment rules. They are life lessons applicable far beyond the stock market. His journey became a powerful narrative, proving that true success, whether in finance or life, stems from a profound understanding of oneself and the world, and the courage to act on that understanding, even when it means standing apart from the crowd. The ultimate validation of Buffett's philosophy came not through a single, spectacular win, but through his sustained success over decades, navigating countless economic cycles, recessions, and technological shifts. His life story solidified his place as one of the greatest investors of all time, a living testament to the power of his unconventional wisdom. He proved that wealth isn't just about accumulating money. It's about cultivating wisdom, upholding integrity, and possessing the rare courage to think differently. Warren Buffett proved something very powerful. You don't need to be flashy to become incredibly wealthy. You just need the right strategy and the discipline to stick to it. If you want to learn more about investing, wealth building, and financial mindset, make sure to subscribe to the channel, turn on notifications, and leave a like so you never miss a video. See you in the next video.